This is Taking Stock on Bloomberg. I'm Pim Fox. Today, Sunstone hotel investors saying, take the property, please. The W San Diego Hotel, to be precise. Now, this came after the Real Estate Investment Trust was unable to modify the terms of its $65 million securitized mortgage. Now, let's turn to an expert for more on commercial real estate. Let's bring in Peter Turchin. He is Executive Vice President at CB Richard Ellis. Peter, welcome. Good to have you with us.
Thank you very much.
What are you check in with the world of commercial real estate. You listen to what landlords are telling you. Let me ask you, how bad is it out there?
We've gone through a very tough time recently, and times have been, it's very, very difficult for both landlords. Tenants have seen the benefit, and activity's been down substantially, and landlords are feeling some of that pain, as well as some tenants are feeling that pain. Those that are trying to sublease space are having a hard time leasing their space out of the marketplace. Activity has definitely been way down in the marketplace.
Talk a little bit about that notion of subletting space, because that's an area of the market where you've got someone who's basically between a rock and a hard place, right? They're already committed long-term to space, and they can't find anyone to take it off their hands for more than it's costing them.
Yeah, correct. That's actually been one of the most exciting things about the commercial industry these days, is that the amount of sublease space in the marketplace has gone up substantially over where it was a year ago. And a lot of tenants are out there trying to find tenants to lease up their space, and they're out there competing with landlords with direct space and other tenants trying to find other tenants who are trying to dispose of space as well. So it's a very competitive market for them.
Are you seeing any difference between the publicly traded REITs and the private real estate investors? Because, you know, we've had analysts on in the past that have said, you know, maybe it's the private investors that really bid at the top of the market. The publicly traded real estate investment trust might be in a little bit of a better position. Is that true, or is that kind of a distinction that it's not really accurate?
Well, some of the REITs have actually had a little bit of advantage in this marketplace and the marketplace going forward, because they've been able to raise some money through the public markets. And you've seen a bunch of the REITs out there who have raised money in the public market. So they're really, I think, getting geared up for the future, and they're able to raise that capital much easier than investors have been in the commercial real estate cycle.
Now, we love to talk about numbers when we talk about commercial real estate. Give us some examples, if you can, in terms of, let's start with the Class A space. This is the top of the line commercial office real estate, and let's talk about the top of the line market in New York.
Yeah, well, I think that you have seen that market come down substantially, and you've seen landlords that at one time seeing rents that were unachieved anywhere in the marketplace have had to come down to a little bit of reality in the marketplace.
Let's give us an example. Like, what would be a per square footage cost in those never lands of 2005, 2006?
You saw numbers even approaching the $200 a foot range.
$200 a square foot.
Back in the very, very height in the market, in the very, very top buildings in the marketplace.
And those same spaces right now, what are we talking about?
You're probably, these days, we have very few transactions that are leased at over $100 a foot right now. So you've seen that market come down substantially. And a lot of those tenants that were in the market for that type of space have also not been in the market as much. A lot of your financial services firms, small one, hedge funds, have been very, very quiet in this marketplace.
If you had to compare the market in New York with, let's say, the market in Washington, D.C., do you see any substantial differences in the fact that in Washington you've got the government as a major tenant?
And sometimes it helps to have a major industry in a particular market. But here, we do have a big diversity of the marketplace, which benefits us as well, because we have more areas to draw growth from. So while that's good and probably stabilizes things somewhat on the downside, on the upside, you're still stuck with a single industry. Whereas New York, we never know where we're going to find the next area of growth from.
What about new build right now? Has new build just stopped across the board?
Yeah, pretty much that new building has stopped, because the market rents don't justify new construction. You need a certain level of rent to justify new construction because of the amount of costs that go into new construction. So you have seen that. Conversely, we haven't had a lot of overbuilding in this marketplace, which has been very different from the past. In the old days, you saw buildings built and you'd have 5 or 6 empty buildings. You don't really see that today. People are choosing to build or not to build with anchor tenants, so you don't have a lot of buildings that are running empty in New York City.
When you say that there's not a lot of buildings running empty, is there a lot of space, though, available? And how does the potential tenant deal with this? I mean, because maybe they don't want to commit.
Yeah, I mean, that has been one of the difficulties. And more importantly, with the amount of sublease space in the market, getting back to what we're talking about, is a lot of the space that's out there is built. So with sublease space is always built space. So tenants now evaluating buildings are not only location and the building, but also the type of space that's built that they have to look at. So they have to throw in another factor when it comes into making their real estate decision, and that's a big factor for a lot of tenants, how much capital they have to put out in terms of moving into space.
Do you hear the notion of, falling value of the U.S. dollar attracting foreign investors? I mean, we heard that particularly in the residential space if you go back a couple quarters. Is that something that you see is going to have an effect on commercial real estate?
Yeah, we really haven't seen a lot of that to date, where we haven't seen a lot of foreign buyers come in. They've had their own issues overseas, so they haven't been a lot of buyers coming in and looking at New York commercial real estate yet to buy properties.
You mentioned this diverse group of businesses that might participate in the commercial real estate business. Are we going to see a lot of the real old families in commercial real estate go away?
I don't think you'll see a lot of them go away. A lot of them, the one advantage that they have over most other landlords is they've owned buildings for a long period of time, and the basis in those buildings are very low. They generally have very little debt on their buildings, and they have debt that matures in many, many years out. So they actually don't face some of the decisions that a lot of people have who did buildings with a lot of leverage and a lot of short-term debt. They generally don't have that problem.
What about private equity? Should we discount all the opportunistic talk in the private equity world? Are they stuck with a lot of buildings they would love to rent or get rid of?
I think you see some people out there that have buildings that they bought at a very high number, and they're now looking to, some of them have repriced their buildings, and you can see that change in the marketplace, and others have been kind of holding on, but fewer and far between. There's been more repricing of space every month as we go.
All right, repricing of space sounds like a moving target. We're going to have to continue the conversation another time. I want to thank you very much, Peter Turchin, coming in, Senior Vice President from CB Richard Ellis, giving us an update in the world of commercial real estate.